Hey folks, Tim Culbert here from Purvis Culbert Law, and I thought while I had some time here that I could take a minute to go over something that I think is troubling a lot of clients, and it's a question I get on a regular basis that I wanted to deal with. And the big question is surrounding how to fill out sworn financial statements when you're proceeding with a divorce. So the first question that I often get from people is, do I really need to fill this out? And the answer is yes, you do. It's incredibly important, um, mostly when child support is involved. However, there are issues with property and with spousal support where looking at your income and your expenses, property and debts is extremely important, not only for your counsel, but for courts and judges when they analyze the circumstances if you end up in court. So the answer to that is yes, you absolutely need to do it. The other question that I get a lot of is, well, what if I don't know exactly what I spend on this, or I don't know exactly what I spend on that? Well, it's important to do the best that you can, and if you have accurate information, you should put that down. However, you know, if you're like me, you may not recall exactly what you spend on gifts each year, but you can get a pretty good estimate. So that's what you want to put down. So I'm going to turn here to a screen share, and you'll excuse me while I do this. Um, this is the first time I've actually done this on a recorded Zoom call. So I've got here just a basic blank sworn financial statement. You know, your counsel can help put this information in. Court of Queen's Bench, I guess King's Bench here. Take a little while to get used to that. Down here, what I often tell people is fill this part out last. This is kind of a summary of your annual income, your monthly income. So you take your annual, divide it by 12, your monthly budget, and then what's the difference. Same thing with property. You would take your property, what's the total value of your share, which is typically 50%, but not necessarily. Subtract your debts, and that's the difference, otherwise known as your equity. Okay, so fill this page out last. That's the summary page. But what you want to do here, first of all, name and address of your employer. That should be pretty simple. Here, if you do anticipate a change coming up sometime soon, material change in your financial situation. So, for example, if you're changing jobs, or you know, you may be retiring soon, you may want to put that here, just so counsel and the judge is aware of those circumstances. This is a section here I don't see often filled out, but particulars of your contribution to property in question. You may want to list that property or add a schedule, which is usually what I see, is the schedule is added on top of this. And then, except as you have not transferred any property, whether by gift to any person for less than its fair market value. Again, I don't often see that filled out, but if you know, that's just a statement that you would swear that is true. Down here, your counsel should fill that out, so don't worry about that. This is where we kind of get into the important stuff. And so first of all, whatever income you receive, whether it's weekly, bi-weekly, monthly, annually, most people are going to be in this bi-weekly category, and you receive your income on a bi-weekly basis. You put your gross income here, by the way. So whatever your gross income is, you put there. If you have other sources of income, so for example, I have many clients who collect EI at certain points in the year, but then work for certain points of the year if they're working in that kind of way, seasonal work, construction and things like that. So you would put that there. If you have income that you're drawing off an RSP or interest, you put that there. And then some other things that you could have down here. Sometimes we have something that's not of the norm. So we might put other employment income, and we just put comments in here to talk about what that income is. So not too difficult. You take, for example, if you get paid bi-weekly, you take this amount and you carry it down to here. And I know that, listen, the discussion about carrying numbers down seems to instill deep fear in many people, and they freeze. This is not to be stressful. It's not that complicated. You can do it. Many people have done this, so take your time and don't overthink it. Your counsel or counsel's assistants can help you with that, but fill out everything that you can. So you total the amounts here at the bottom, and then you basically do whatever it says here. So if you had a bi-weekly subtotal, let's just say, for example, my bi-weekly gross income is $2,000. Okay, so pretty simple. $2,000. You put $2,000 here, and down here you're going to put $2,000, and you times that by 26, right? Because it's bi-weekly income. Times it by 26. Not hard to do. Pretty simple to do that math. And then so that'll be one of your potential summaries on the first page. If you have other income here, then obviously it's going to be the total amount of all these lines together, A, B, C, and D. Going to the next page here, if there are adjustments for child support, complete one of these columns. So if you're receiving child support, put that in here. If you're receiving support for a dependent other than a child, put that in here. Or if you're paying out these expenses, so for example, union dues, professional dues would come out of there. Same thing, you carry that down here. Special expenses. This is important, and this is certainly one of the areas where many people aren't quite sure of. So under Section 7 of the Federal Child Support Guidelines, there's a definition of special expenses. It typically includes expenses such as medical, dental, health insurance, extraordinary primary, secondary school, or extraordinary extracurricular activities. So the way I explain this, and the special expenses related to a particular child, and so extracurricular activities, for example, may be a special expense if your child is involved in competitive sports, and for horseback riding or competitive figure skating, or competitive hockey teams where the costs are more significant and they're traveling all over the place. That could be an extracurricular expense that qualifies as a special expense. So that's something to keep in mind, and that's important to know because those are supposed to be divided proportionately to your incomes. The next page that's important here is, and this is I'll carry this down here. So calculation of your actual monthly expenses. This seems to be the area that the page that trips people up the most. This doesn't have to be complicated. For example, if you pay each month, let's just say $900 on your mortgage each month, there you go. Your property taxes, I don't know, like an average property, a couple $100,000 middle class income home, you might be paying, let's say, $2,700 per year. Okay, that's whatever your property taxes. Your insurance, what do you pay? Either bi-weekly, monthly, electricity, heating, food and clothing. I often get questions about this, like I don't know exactly how much I spend every month on this. Just try to come up with the best estimate that you can. Same thing for clothing, telephone, those expenses. Auto insurance, gas and oil, auto servicing. you know, you could probably find some receipts laying around, or if you're like me, I have a pretty good idea, but not a perfect idea of what I've spent over the last year on auto repairs. Credit card payments, probably on a monthly basis, bank loan payments on a monthly basis, and then any other things, life insurance, medicine, children's allowances, gifts. Again, this is one that seems to trip people up. If you're like me, I have no idea how much I spend per year on gifts, but you know, you could probably do a pretty good range and come up with that. Entertainment and recreation, what do you spend per month, for example, on entertainment and recreation? Again, you're not looking for perfection here, but you know, unless you're doing something extravagant, you should be able to come up with a pretty good estimate. So again, you carry these columns down. Here, the totals go at the bottom, so your subtotals, and then you take your subtotals from each of these columns and just do what it says here, right? So if you've got your weekly subtotal, times that by 4.33, your bi-weekly subtotal, 2.16, your monthly, just leave it alone because you're going to use that monthly amount. And then your yearly subtotal, divide that by 12 because you're going to compare that and add that all up with your other amounts. So pretty simple. This page here, the calculation of proposed monthly expenses, not necessarily so important. So if you do propose that some expenses would change, so for example, some people may be selling their house and they anticipate that they're going to be paying rent for a while, and it's going to be different. So you may want to put that down here, or you're going to cut some of your expenses from the last page to kind of make ends meet until you get to court. So you anticipate that that's going to be a little bit different. Okay, so if you anticipate that your expenses will be greater than those shown in your actual after your court appearance, so just if something's going to change, put that in here. Okay, that's one that often is left blank, to be honest with you. I don't see that filled out as much. Moving on here, and for the sake of time, I want to just kind of keep it moving here. Again, take your time on this. We say to people, just don't worry about if you mark with pencil or pen and you make a mess of this. We can type it out for you, use it as a worksheet. If you have questions, come and ask us afterwards, but hopefully this is helpful. This here, you list all the different types of property you may have. So for example, here, you know, you've got a house on 15 Duke Street in Fredericton, and actually look, I made a mistake there. So this here is your, just copy and paste this. See, take your time. You make mistakes on this, it's not a big deal. You can put this over there. So there, location over here. Typically the type of property, it's marital home is your major property, but you may have another property. For example, people often have like a vacant lot or something like that that they want to put down here. So put that down. Your estimated current market value. So a rule of thumb is if you don't have an appraisal on the property, the market value is what the assessed value is. So you can look at your tax assessment and figure out what the market value is. However, to be cautionary on this, especially when the real estate market is the way it has been the last couple of years, the market value is typically higher than the assessed value. In the last few years, it's been markedly higher. So just, you know, you may want to have an appraisal done by a real estate appraiser, or ask a real estate agent, and you may want to put a market value. So let's say, you know, 200,000 market value. Value of your interest, 200,000, let's get that in there. So value of your interest, obviously that typically is half. So in this case, you're going to have $100,000 interest in that home for you, $100,000 for someone else. Okay. Same thing with this. Same thing with these items: furniture, appliances, motor vehicles, boats, other things. If you have cash and money in bank accounts, pension funds, RSPs, you put those in there. Again, your value of your interest should be half, but there may be circumstances where you acquired certain property before marriage, and not all of it is marital property, but that's something you can talk about with your counsel. If you have security, same thing here, and that's important. One of the things that I would suggest here, and that can be helpful, is just a suggestion, is that you may want to look at coming up with an agreed upon amount between you and your spouse of what kind of furniture and appliances are worth in your house. Lawyers, family law lawyers and judges, unfortunately often see people who are arguing about, for example, I've seen before someone arguing about, the value of a toaster or a fridge. Honestly, most of those items don't hold much value after they're purchased. So, you could come up with an amount, like, furniture in your house. You may say, I have some really high-end furniture, so I think, it's worth $15,000. They're heirlooms. If you really wish to get appraisals, you can call an auctioneer and they'll come and give you, for a reasonable price, an appraisal on the furniture in the home and the appliances, and so on, the jewelry. But at the end of the day, I try to recommend people not to get too hung up on these nitty-gritty little details. Make and model of vehicles, pretty easy to find out your basic range. You can go online now and look at a Blue Book value, or look at the Auto Trader for a used vehicle of that year. You can kind of find an average, and usually it's not offensive to put that in there. Moving on, some other items here in property that you want to fill out. The final page here, and again, I've got this, it's just a Word document, so I'm going to bump that down to the next page. The final page here is about your debts. So, for example, what most people have, unless you're really lucky, is you have a mortgage. So we'll say big bank mortgage, and you got a $200,000 house. Well, maybe you're lucky enough and you've paid your mortgage down, and you are now down to, in a few years, $150,000. Again, typically your share of the debt and your partner's share of the debt is going to be essentially equal. Okay, so once you've done all those and you've got your amounts there, then you can go back to the first page and kind of figure out from there what your totals are. So you can take your annual income, figure out your monthly income, take your expenses, divide that by 12, figure out what your monthly budget is, and then your difference. Okay. And if you're like most people, that's a minus number, it seems, these days. Same thing with the property and debts. And then the magic numbers here are when you look at your equity. And that's really what value you have after you take your property and subtract the debts. And that's what's to be split between you and your spouse after separation and divorce. So I hope that's been a good quick primer on a sworn financial statement. Again, this doesn't have to be a stressful a thing to fill out, as most people seem to think it is. It's really just a way to give everybody a snapshot of what your circumstances are, so that your lawyer and the other lawyer, and if you go to court, a judge, can really make decisions based on how to divide things. One thing I would say on this that's a good point to make, and it goes back to the beginning of this video, is the question of, do you have to fill this out? Well, the other thing is, do I have to fill everything out in here? And the answer is yes. You are required under the rules of court, under Rule 72, and under the Divorce Act, to fill these out completely and as honestly as possible. You are swearing an oath, or affirming that you're telling the truth. So I mean, that is important. That comes with a penalty of perjury, and you have to make full disclosure when you do your divorce. And so I've had people ask before, well, can I just not put this in there? Let's just slide that past this person. Listen, you can do what you want to do, but it would be a terrible idea to lie under oath, possibly criminal, because it's perjury. And then in addition, It's not going to serve you well if somebody finds out that you've not put that in there. And your lawyer's probably not going to be very happy with you if you haven't told the truth here. So no pressure, but this is something we do every day, and so I wanted people to be more comfortable with this. If you have any questions specifically, feel free to ask us or contact us through our website at 325-3333 is our phone number. We'd be happy to answer your questions, and I hope this was helpful. Thank you. Bye-bye.